Let's talk about appraised value and how that compares to the sales price of a home that you're maybe going to be purchasing. So, if somebody's buying a home, in most cases, not always, but in most cases, a home appraisal is going to be required. And that's where a third party person, an appraiser, goes out and assesses the value of the home based on other homes in the area that have sold recently. In a perfect world, and the world isn't perfect, but if it was, perfect world, the appraiser is going to go look for homes that have sold maybe in the last 6 months within a half-mile radius. Find maybe two homes exactly like this one in terms of size, shape, and feel, and then maybe find two homes a little bigger and two homes a little smaller. That's called bracketing. So they try to get a good assessment of what that value should be based on homes that have sold. So notice it's not what somebody's willing to pay. Like during the COVID years, people were willing to pay a lot more than what was sold just because there were so many offers and they needed in the home. So understand that is the difference. The appraised value is just here's what the value is based on other homes that have sold recently, whereas a sales price is going to be what's happening today. Because now, when somebody goes in and pays way more money than what the neighbor paid because they need to get in, they're paying 10, 20, $30,000 more because man, they got to get in here. Maybe their job's starting, maybe they just got to get out of wherever they were. The reality is that is a sales price and that's a market value, meaning what somebody's willing to pay, whereas the appraiser is based on historic data for something that's already happened. So there is a difference. So in the mortgage community, why does this matter? In the lending community, we as lenders, we're going to lend the lesser, meaning the lower amount of the two values. So if somebody comes in and says, man, I'm buying a house for 400 grand, that's wonderful. Congratulations. They're paying 400 grand. But if the appraisal comes in at 300,000 or 380, let's take something not so dramatic, 380, we as a lender are going to say, man, you are now going to use 380. So now everything you're doing, like if you want to buy this house and it stays as is, the first 20 grand that you're putting down as a home buyer doesn't go towards anything as far as the lender's concerned. It just means that gets you to square one. So once you're at 380, if you want to then put down 10%, you would have to put down 38,000 on top of the 20 grand you just put to make up the difference. So it is important to make sure that ideally, in a perfect world, in this perfect scenario, your value comes in at the sales price or higher so that you don't have to come down any extra money out of pocket. But if there is a gap, you get to go back to the sellers in most cases. It depends on how the contract's written. But in most cases, you can go back to the seller and say, hey, guess what? Appraisal came in low. And let's take an example of maybe like 395. Maybe it missed by like 5 grand. Appraisal came in low. Instead of the 400 I'm paying, it came in 395. Mr. Seller, I'd like to buy your house at 395. Seller has a choice to say sure or no. Or they might say, well, how about we split the difference? So it goes back to negotiations to anybody's ballgame. They can say no. You can say, well, heck, I'll still buy it at 400. It's your choice to make. It's their choice to make. But the seller doesn't have to come down. So let's just be very clear on that. They don't have to come down if they don't want to. And it's then your choice of what to do and how to do it and what to do as far as money out of pocket. So that is the difference. Lenders are going to use the lesser of the two numbers. So even if your house appraises for $1 million in this example, we're still going to use the purchase price because it's lower, even if it appraises for $1 million. So if you want to put down 10%, we're going to say, okay, you just need to put down 10% of the 400. You can't say, well, I already got, that 10% based in because of all the extra equity. That doesn't work that way. So check out, there's other links in here about like how to get your home ready for the refinance, for like if you own a home, how to get it ready for the appraisal on a refinance. There's information there how to challenge or request a appraisal review. There's a way to do that. When to pay for an appraisal. So check all those things out. It's certainly down here and there's more, but as always, we'd always encourage you, if you or anybody else has questions about anything mortgage related or just numbers that involving real estate, call us. We are happy to help because we want you to do this. Anytime you think mortgage, think Mark.